Q2 FY2023 earnings conference call for IFB Industries Limited, hosted by Nirmal Bang Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prasheel Gandhi from Nirmal Bang Equities Private Limited. Thank you, and over to you, sir.
Thank you, Lizelle, and good afternoon, everyone. Nirmal Bang Equities Private Limited welcomes you all to 2Q FY23 earnings conference call for IFB Industries. From the management team, we have Mr. Kabir Chatterjee, Director and CFO, Mr. Raj Shankar, MD and CEO, Home Appliance Division, and Mr. Arup Das, Head of Marketing Engineering Division, and Mr. Anand Reddy, CEO of Motor Division. I now hand over the call to management for opening remarks, post which we can take Q&A from the participants. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. I welcome you for IFB Industries Investors Call for the second quarter FY23. Joining me today are Mr. Raj Shankar, MD and CEO of Home Appliance Division, Mr. Arup Das, Head of Marketing Engineering Division, and Mr. Anand Reddy, CEO of Motor Division. Growth during this quarter is 13%, and YTD growth for the first half was significantly higher compared to last year. Company has reported a total income of 1101.92 crore for the quarter with a growth of 13% over the same quarter last year. During second quarter, EBITDA was rupees 74 crore, which is in line with last year. Lower margin percentage is mainly due to lower than expected revenue in appliance division, along with higher material costs and operating expenses. Effect of commodity prices started coming down, and effect of which is expected to be realized in the third quarter. YTD revenue during first half was 2151 crore with a growth of almost 40%. EBITDA margin during the period was significantly higher at rupees 112 crore compared to 44 crore last year for the same period. With this, I will request you to start the question and answer session, please.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manoj Gauri from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity. Sir, first on the demand front, what we understand is that the festive season also was not so encouraging. So in this case, with RM prices coming down, how do you see the pricing environment across industry and by you as well? Can you throw some light over there?
Yeah, so Raj Shankar here, Manoj. The reduction in the RM pricing, as far as we are concerned, will help us to improve the margin. We are not thinking of any pass-through pricing on any of the products as of now. As far as the competition is concerned, my understanding is that for more than a year and a half now, companies like Samsung, LG have taken very aggressive price positions to gain share, which is quite an industry-wide point being discussed by everyone per se. So I don't see them lowering prices beyond what they have already done. So per se, I think the reduction in commodity prices far as we are concerned, is margin accretive. I don't see any changes in market price positioning per se. Does that answer your question?
Yes. So it's just first week of November. So if we look at the September average prices, so can you just quantify like what could be the positive impact on the overall appliance business for us, and how should we look at the gross margins and EBITDA margin for the remainder year FY23?
So if you, there are two exercises which are running in parallel, which, as we had shared previously, our target is to complete everything within Q4. One is the material cost reduction initiative, which are through either value engineering or through resourcing. And the second is the impact of the reductions in the commodity prices. The combined impact of both, as far as gross margins for us are concerned, is between 3 to 4%. That gross margin level.
So probably what we understand is like that 3 to 4% would be moving to EBITDA levels, and probably we might see somewhere around high single-digit kind of EBITDA margins during Q3 and Q4, depending on the current RM prices and the visibility that you have.
Correct.
Right, sir. So secondly, if you look at from the room AC point of view, so obviously, where do you see yourself as a branded, like what should be the branded volumes this year where we would be exiting, and probably on the also on the outsourcing part, and what we aspire to do next year?
So if you see our overall indication for the full year was about 220 to 230,000 for the brand volume, and about 150,000 for the OEM volumes. So we will hit the brand volumes. As far as the OEM volumes are concerned, the exact lifting plans of the OEMs and their orders, etc., are being discussed for the period from, let's say, November up to March, and then, of course, up to June. So as of now, it looks that the volume guidance is maintained. However, we are still to receive firm POs. So that is something that over the next, let's say, 30 to 45 days will get closed.
Right, sir. So lastly, on the OEM manufacturing, so if I'm not wrong, probably we have roughly around 3-4 clients over there. So any development where we are trying to acquire new clients or building on clients' profile, can you throw some light like on any ongoing discussions with newer brands?
Yes, there are ongoing discussions with about 7 people, including the 3-odd people who we supply to already. And as I said, between now and the next 40-45 days, we expect that with a set of them, the season volumes will be totally set.
Right, sir. Right, sir. So that's all from my end. Thanks a lot and wish you all the best, sir.
Okay, thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Dhananjay Bagrodia from ASK Investment Managers. Please go ahead.
Are you noticing any demand difference between rural versus urban and entry level versus premium?
If you don't segment in terms of urban and rural, but if you segment by tier 1, tier 2, tier 3,
sure,
then the growth, which has been sort of consistent over the last 2.5 years, the tier 2, tier 3 is growing much more rapidly as compared to tier 1.
Okay.
This has been a consistent trend now, and it's almost the third year that this is happening. As far as the entry level versus the premium or the higher end of the segments are concerned, that trend is very clear that the higher end is growing far more rapidly than the entry level price points.
So why is that? Any thoughts on that?
Well, that's an interesting question, and See, I would put it as an outcome from 2-3 enablers. I cannot say with firmness exactly which one it is, but it is probably a basket like this. So one is that the tendency to buy something bigger, whether in washers or for that matter ACs, for example, has always been there. So parts of the north have always been favoring higher capacity, for example, 8 kg capacities in washing machines. That trend was building. The pandemic period and the lockdowns and everybody at home getting involved for the work at home, I think accelerated that trend. So because everybody in the family was involved in the process of washing, everyone suddenly realized that there were 2 or 3 multiple washes happening at home. Why could we just do it in one? Let's buy a bigger, newer machine. A lot of the equipment went through exchange during those lockdown periods. So I think there was a trend. That trend got accelerated over the last 2 years, driven by lockdowns and more people at home participating in chores at home. This is one reason. The second is that the availability of finance has definitely helped, because if an entry-level product is 25,000 and a higher end is 40,000, then in cash that difference is 15,000, but in EMI terms it is maybe 1,500 rupees. So as finance options have expanded, the ability to buy something higher price has also become much easier. The third point is that the availability has also improved. So if I look at IFB, for example, and I look at our higher end products, and over the last 2.5 years, which we've also shared in these calls, is this agenda that we've driven of improving range displays across the market. So if I just look at a 8 kg or a 9 kg washing machine, for example, the number of displays available today is much bigger and better than, let's say, 2 years back. So I think as visibility and availability has improved, that has also given access to the higher end. So I would put it at 3 reasons, as a combination probably of all the 3.
So then just to understand, so you said that LG and Samsung, for example, they are really competing on price point, but then if availability of finance will also significantly help, and if the products are, let's say, a little better, then why are they moving more towards LG and Samsung and lower price points? Because on an EMI basis, then the difference doesn't come to much then.
No, I think even in LG, Samsung, I would expect that the trend is that the higher end is selling more. Are you saying that their lower end is selling more?
No, I'm wondering, is it industry-wise in terms of that even at a higher end, everyone is they're cutting the prices even on a higher end? Is that right?
No. Industry is not cutting prices. What I said is that there is a specific reality that Samsung, for example, has taken very aggressive price positions across all categories. Our understanding is that they're doing this to basically buy shares. But it is not something that is happening at any particular entry-level price point or higher-end price point. It's more a common thing as well. So that's a separate thing. That is not related to this point about the higher-end selling much. Okay. The higher end that is selling more, the 3 reasons that I told you actually have nothing to do with price per se. Because the 3 reasons that I gave you are not particularly price driven. They are driven by other factors, which is something that IFB is experiencing. You see, we have not changed pricing. Pricing has only increased if you look at the period from Jan 21 till now when the commodity prices actually increased. But we have still seen a very rapid growth in the high end.
Sure. And so, industry-wise, would the demand be where companies were present in front-loading washing machines? Would the industry demand, what would you think, what would your analysis be in terms of what would be the segmentation industry-wise on front-loading washing machine versus top-load in volumes or size?
But typically, it is a sort of factor of 1:3.
Okay.
which could vary from 1:2 to 1:4, depending upon which geography in India you are in.
Okay. Sure. And in terms of size?
I was talking about size only. Volumes, 1:3. Do you mean by value?
Yeah.
So by value, it will probably be 1:2 or 1:1.7, because of course the front loader price points are much higher than the top loader.
Okay, fine, sure. And so lastly, I'll come back if I have an option. But so what levers do we have to improve our return ratios?
Which ratios, please?
Our ROEs and ROCs?
So we have two levers that we need to fully deliver on. And the first is the volume. So in that, the key agenda that we have spoken about is that there is a particular universe that we have. And over the last 2 years or so, our constant agenda has been that we do business with a higher percentage of that universe every month as compared to what we are doing today. Now, over the last 2 years, that percentage has improved, but we are still not happy with the pace of that improvement. We think that it increased much more, so our extraction from our available universe needs to be much higher. This is our first agenda. The second agenda is that the results in the previous fiscal year and also in the first quarter of this year were not good, primarily because of the material cost related hits that we had, which we couldn't pass through to the market. And with the material cost reduction program and the softening of the commodities by the Q4 of this year, on the material cost side, we need to fix the margin structure. So for our return on investment to improve, these are the two big agendas for us. Does that answer your question, please?
Sure. If you have a little more granular in terms of how we see that in numbers, that would help, but this is helpful for broad thesis.
Okay.
And maybe we can slip in one more. So with now, let's say some larger players like World Bank also try to make a big dent in the segment, how do we see that in terms of as an industry-wide? Do we see that then means for margins in the industry will still always be suppressed because we have two already large players reducing prices or keeping prices lower? Now we have another player who's trying to also gain market share. How would that work for an industry-wide?
So my understanding is Voltrek still has to make headway in terms of representation across categories and markets, etc. So as of now, there isn't any impact. As far as IFB is concerned, I don't see any impact from them. As far as industry is concerned, we don't have enough data right now to be able to really answer this properly.
Okay, fine. I'll come back in for more questions. Thank you.
Thank you. The next question is from the line of Bhargav Buddhadev from Kotak Mutual Fund. Please go ahead.
Yeah, good afternoon and thank you for the opportunity. Sir, if you look at other peers in the sector who have reported, IFB is possibly an outlier in terms of sequential improvement in gross margins. So is it that we were sort of sitting on low-cost inventory and our high-cost inventory was already exhausted, or what should be inferred here?
See, I will answer it this way. Our inventories have never really been very high because the key parameter of the market credit for IFB has always been under, the debtor positions have always been quite tightly controlled. So inventories per se have not been high. We do have a higher inventory in the AC segment than what we would like, and for the next 2 months, that is something that we need to address. But I think the improvement that we have made has come because this agenda of delivering on the volume and looking at material costs and doing the best possible exercise on that, I think we are making some progress on that. It's still not complete. There is an agenda that we have to deliver by Q4. But I think our improvement is coming because on these two heads, there is progress we are making. So if you look at the revenue growth in the H1, that percentage is better than before because we are covering more of the of the market universe that we have. We put in place a lot of measures for our people to visit the market in a much more disciplined manner than before. We are building engagement programs with trade partners. And we just have to do more of that. We still think that we are under-leveraged in terms of what is possible for us on the market side, revenue side. And we just have to keep doing what we are doing. Does that answer your question?
Yes.
Or is there some other clarity that you'd like?
No, this is good enough, sir. And sir, historically, if you look at our 5 to 10 year history, we've delivered very well on the revenue growth front. However, our EBITDA margins have been extremely volatile and also much lower as compared to industry standards. Now that we are trying to complete the product portfolio thanks to good acceptance on the air conditioner side as well, is it fair to say that we will sort of come back in terms of consistency on the margins as well, and we can be closer to 8 to 9% EBITDA margins maybe in the next 2 years?
Yeah, so I don't want to give a figure, but that is something definitely which we have to deliver. And Mr. Chatterjee and I have come quite often to this forum. And this idea that our margins are volatile and simply not good enough is a question that we face multiple times. So yes, definitely this broadening of the product basket is helping because the overheads are getting distributed over more products, more volume. And we still have a job to do on the material cost and the market extraction. But if we finish these two jobs properly by Q4, which is our internal target, I think this question of the stable margins is something hopefully that we can settle by Q4.
And lastly, sir, on the AC side, is it fair to assume a 50-50 mix between your OEM sales and your branded sales?
Yes, it will be about 60-40 or 50-50, yes.
Okay. And
more like 60-40, more like 60-40.
And the combined margins would be similar to the company level or would be lower as compared to the company level margins?
The AC margins currently are lower than the average for the company. And once
next year, maybe once we reach cross 500 crores of top line. Hello?
I would, if I compare it to washer margin, then even in the next year, the AC margins will be lesser. But one advantage that the ACs bring to the table is that they are actually they are soaking up the overhead.
Right.
And the volumes on the ACs are very high once we get the game right. So in terms of helping the overhead allocation across the company, and therefore helping better margin profiles for the company, they have a very important role to play, even though on an individual basis, the margins on that segment may still be lower than the washers. Mr. Chatterjee, would you like to add to this, please?
No, I think you're right. Absolutely right.
Okay. And sir, what would be the biggest turnover coming in from from your largest OEM client? What would be the turnover from your largest OEM client in AC?
For this year?
Yeah, for this year, or maybe first time.
Can we answer this question offline because the numbers are still not fully closed? So
no problem. Okay, thank you and all the best.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Manoj Gauri from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity. So one more question with regards to competition. So recently, Whirlpool in their press release had indicated like they have been starting the commercial operations of the front load washing machines, which again would be a re-entry into this category. How do you see, because normally when you look at they are relatively lower price versus LG and Samsung, and probably in the front load it would be almost similar to your pricing. Do you see it as a major threat probably this time? Not as a threat, but at least a major competitor or a player that could evolve over the period?
So it is a player that definitely needs to be watched. There are already multiple players for the placement of front loads on the floor of the stores. So this will be another addition. But Whirlpool has had some placement of front loaders for some time now, which was through imports.
Right.
So the imports being substituted by the manufactured products and how that happens in placement, I think over the next 1 year we have to keep a watch. But we have to keep a watch definitely.
Right. Sir, but on the other hand, so I just wanted to understand from a competition point of view, because if you look at LG and Samsung have been aggressive on pricing to gain market share. So probably if you look at, despite the significant pressure from the RM, the overall the price hikes taken were lower than required. Now with the RM benefits, can there be a case where they actually go aggressive again to gain market share, and probably whatever benefits that they would be gaining, they would be passing on to the end consumer?
We have to watch for this. Like I said a while back, I personally don't expect further erosion in pricing from them, but we have to wait and see. I think over the next quarter or so we'll know.
Right. But there was nothing visible during the current quarter, and we don't expect anything in the current quarter. Obviously, the majority of the season has gone through. But
yeah, so there was nothing specific as far as this Diwali period was concerned beyond what they were already doing. And I don't expect it, but like you pointed out, we have to keep a watch on this.
Right, sir. Right. So just one last question. So obviously, when you look at the company, probably till FY19, we were one of the fastest growing brand in the Indian home appliances. During 2021, we faced some challenges with regards to competition, and also there was COVID impact. This year, obviously, when we look at FY23 numbers versus FY19 numbers, probably the CAGR growth is much slower as compared to the historical levels. So going forward, should we expect like probably the 15-20% growth that we used to report at the company level, probably that should be now somewhere around 14-15%, or we should be back on track for that 20% mark?
I think our potential is the figure that you gave. And the key thing is for us to execute this market extraction properly, because the headroom for growth is definitely much higher than what we have delivered.
Right, sir. So that was very helpful. Thanks a lot.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Prashil Gandhi from Nirmal Bang Equities Private Limited. Please go ahead.
Hi, thank you for the opportunity. Sir, a couple of questions. First is on our front load washing machine. So we were planning to launch inverter motor technology and Wi-Fi enabled, but that timeline has been pushed to first quarter of FY24. So could you throw light what is the cause of the delay?
So we have already introduced some models which are in the market, and some models which will ramp up from November this month. And some of the models will come in Q1 of next year. So per se there is no delay. It's only that we've spaced out the entry.
Okay, and so the complete rollout, when can we expect the complete rollout to finish?
Yeah, the full range replacement will be over by end of Q1 of the next year.
Okay. Thank you, sir. That was very helpful. A second question related to BLDC motors. I think we have pushed the timeline from September of 22 of this year to January 23. So could you throw a light on why is that delay in that segment?
This is Anand here from Motor Division. See, basically, we wanted to start manufacturing BLDC motor in September. What happened in between was there were few other models that the market demanded, for which the toolings and trials took some time. So that's why it's getting delayed till Jan 23.
And so this is for both washing machine and air conditioners, right?
No.
So
First,
both will be rolled out from January 23.
no. First, we will roll out the BLDC motor for washing machine in Jan 23, and then the air conditioner motor will be rolled out somewhere in May, June 23.
Thank you, sir. That was my second question regarding this. So will we be also kind of selling direct BLDC motors to our competitors and other OEMs?
Yes, we will be doing that.
So who would be the major OEMs that would be trying to sell to?
We are looking at Voltas, Blue Star, Daikin, Panasonic, Samsung, and other people.
So what would be the likely mix for this? Like for our own consumption versus OEM sales?
We are targeting 50-50, 50 for captive consumption and 50% for outside customers.
Thank you, sir. Second question, one more question regarding our e-com sales. So, could you highlight what were the e-com sales as a percentage of total sales for the quarter?
For the quarter?
Yes.
For the quarter was 16.9%.
And versus what was the same number last year?
Last year was slightly higher.
Okay. So is this the trend that how e-com sales are coming down? So would we expect the same trend going ahead?
Ari sir.
See, we don't look at it so much as a percentage to the total. But if you see, our potential for growth from the offline channels is very high. So if that growth comes in line with potential, then yes, e-commerce as a percentage will reduce. But in value terms, e-commerce will remain a growth engine. Have I been able to answer this question?
Yes, sir. Yes, sir. That was very helpful. Question pertaining to price hike. So what is the overall price hike that we have taken across our portfolio for this quarter?
This quarter, we have not made any price increases.
Okay. And sir, a final question from my end. We are also planning to enter a 28-liter microwave segment. So could you highlight the market potential for that segment?
So if you see, this particular 28-liter capacity point has been monopolized by LG and Samsung till date. And we have been absent. So in their convection range, for example, this 28-liter price point is almost 60-65% of their sales. And we are going against that particular segment with this introduction.
So what would be the typical market size for this 28-liter?
So if you see in terms of IFB's own volume, this particular introduction has the potential to increase volumes by around 10-15%.
Okay. Thank you, sir. That was very helpful. I'll get back in the...
Thank you. We'll move on to the next question. That is from the line of Dhananjay Bagodia from ASK Investment Managers. Please go ahead. Dhananjay, your line is in the talk mode. Please go ahead.
Can you hear me?
Yes.
Hello? Yeah. Can you hear me now? So basically, we have limited data, but according to your estimates, what would be the industry size for, let's say, our top, let's say, for washing machines, and what growth rates in terms of volume and value could we see over the next few years?
So the total washing machine industry, which is semi-automatic plus front load plus top load all put together, the general estimate is that this is roughly, let's say, 50-55 lakhs going up to maybe 60 lakhs.
Okay.
It has been growing in normal years by around 10, 12, 15%. And the penetration, if you really look at the data, are still very low. So there is no reason why this growth rate should not remain like this or even maybe accelerate a little bit.
Okay. And in terms of these three, what would be the mix between semi-automatic, top load, and front load?
So the front loads would be maybe 1.75, 1.6 approximately.
Okay.
The rest you could divide equally between semi-automatics and top load.
Okay. 1.6, 1.75? Equally. Okay, fine. Okay.
Maybe about 1.5, 1.6 million.
Okay, understood. So then remaining out of that 45 will be divided by 22, 22 now. Okay. And so going ahead, if you assume industry grows at 10-12% volume growth, what would in terms of value growth, would that be assuming that would be nil, or would there be some growth in the value?
No, see, value growth will be more for two reasons. Because the mix has changed and the higher end is selling more than it used to.
Okay.
So there is a value growth associated with that, and then of course there is the price-led value growth. So on both counts, the value growth will be more than the volume growth.
Okay. Sure. So we could assume around 12 to 15% total, including volume and value and mix change, is an expectation for the industry.
Yeah, I mean, that has been the trend, and I think the trend will remain.
Okay, fine. Sure. And sir, lastly, in terms of now, we've also spoken about a new product in your report about washer dryer and washer dryer and reflection in one segment. Is that something which we have an innovative product which no one else has, and is that something which we could see opportunity in that also?
So the washer dryer is a genuinely innovative product. This idea that you can wash, dry, and also steam and refresh clothes, which means you don't need to wash clothes, you can just refresh them, and genuine cleaning. It's not a cosmetic refresh.
Okay.
It's an extremely innovative product and is doing well. We are driving placement increases across India, and we also see good volumes in this.
Okay, but it's relatively be too small right now to speak about what potential it could be and how that could go for us.
So growth in a market like India is driven a lot by availability. Now, assume that we were able to place this in every single relevant counter across India, you would actually see very high volumes. That is a task that we have to do. Is there a market for this everywhere? Definitely yes.
Okay, sure. Thank you, sir.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Abhinav Jain from SG India. Please go ahead.
Sure, thank you so much. I have 3 questions. First of all, on the home appliances division. You mentioned that there is a 3-4% material margin improvement that you are expecting. One is through internal initiatives on value engineering and working on the bill of materials. And second, there is softening of commodity prices as you've observed. However, my question was that once at an EBITDA level, this will result in a much higher margin improvement given AC volumes would kick in and the full year volume projections are much higher than last quarter. So this could actually, the EBITDA margin could hit double digits, not just high single digits. That was question number 1.
Okay. So the answer to that is potentially yes. On this agenda of completing the material cost work and getting volumes, especially the AC volumes right, that is a job that we have to complete. But the answer to your question is yes, a possible yes.
Okay. And is there a very different, as in I'm assuming you would know ballpark estimate of cost of finished unit production for competition. So is there the cost structure at a unit level for a like-to-like product for front loaders? Is it very different across major players, say IFB, Samsung, LG?
So I would not call the difference major, but there are differences, yes, because the fact that we commit to a 10-year lifespan for the product, and if you are an LG or a Samsung customer and you want spare parts after 3 years, they will show you a depreciation policy. They don't service products after 3 years, 4 years. But IFB services right up to 10 years and in many cases beyond 10 years. So the inherent quality that we have is superior, and therefore the bill of material reflects that. It could be something as simple as the quality of the rubber that we use, or the electronic designs that we have for the voltage variations in India. So we have relatively higher bill of material compared to, let's say, specific competition like LG Samsung. It is not structurally different, but the elements in it are higher because of the quality level. Is that what you wanted to know, please?
Yeah. And you mentioned that Samsung had been very aggressive. So how do they do it? Is it that they reduce the MOP of the market operating price for the products, or they give higher channel incentives and kind of guide towards the same MOP? Because it's a race to the bottom in some sense, as in if they become aggressive for a longest term, then everybody, including IFB, will have to respond, and nobody would like to lose market share in the shorter run. So I just wanted to understand, is it short-term more incentives to the channel that they give, more volume discounts, or they just reduce the MOP for some time, keeping the channel margins on a percentage basis same?
It is a combination of both, and we have never responded to this, not before. And specifically for the last year and a half, when they have done more of this, we have not responded. So if you see our growth rate, they are in spite of this sort of move by them. But what they do is a combination of both the things that you described.
And what's the typical channel margin like from a dealer landing price to a MOP in the category that we operate in, both front loaders and ACs as well as ovens?
This varies from place to place, but a typical channel partner margin could vary anywhere between 5% to 14-15%, depending on the product category or the geography. There is a wide variation in this, but roughly this would be the range.
Thank you, sir. And my second question, or second line of question, was on the motors division, and it's probably somewhat linked to the appliances division as well. Are BLDC motors being used in the appliances, both front loaders and in ACs in the industry currently? And what percentage of the overall industry volume would be BLDC motors? That's number one. And second, what, say in FY25, when you are operating at optimal capacity, what sort of external revenues is being targeted through BLDC motor division? Because the numbers, at least in volume terms, look very, very high, which is good for us as shareholders. But just wanted to understand what sort of addressable market or what sort of scale on a revenue basis are we hoping to achieve from BLDC sales to external customers?
Anand, you can answer this.
Yeah. See, on the external customers, we are targeting 50% of our installed capacity, that is 1 million each. So 5 lakh motors of BLDC for washing machine, which translates to around 50 crores of revenue, and 5 lakh of air conditioner motor, which translates to roughly around 40 crores of revenue. So 90 crores revenue we are expecting from outside customers.
And has there been adoption of BLDC motors in these two categories already in the industry?
Yes.
And who is supplying them?
See, predominantly it is being catered by import right now.
Okay. So And there is a company called Igarashi Motors, and I'm sure there would be other players also developing BLDC motors. So is there, and so from an industry adoption perspective, again, my question was, what percentage of overall volumes of ACs and washing machines would have BLDC motors, and who are the upcoming industry players? My question was, I'm sure the volumes are so high that there would be multiple motor suppliers and even captive manufacturing that can take off on the BLDC side.
Yes, there are multiple motor manufacturers who are developing BLDC motors, but I don't think anyone have productionized it on a large scale yet. So it is being catered by imports mainly as of now. Maybe within the next 6 to 8 months' time, people will start manufacturing some of the BLDC motors in India.
And what percentage of overall industry volumes will have BLDC as main motor technology for ACs and washing machines?
That I think Mr. Ray would be in a right position to answer that.
So, if you see in washers and you take a 2-year horizon, then in a category like front loader, probably 80 to 90% will be BLDC. The top load and the semi-automatic, semi-automatics will be nil. In the case of top loaders, it will probably be anywhere between 30 to 35%. If you look at ACs, then the use of BLDC motors is at presently roughly about 10 to 15%.
And this will offer significant electricity savings for the consumers. That's the main USP of the plank.
Yeah, well, it will offer savings on the electricity front. Noise levels are lesser. And the government energy regulations are also mandating moving to technologies like this.
Sir, if I may ask, how stable is that technology, given we've heard the field failure rate, and obviously it depends on the evolution in terms of your technology, quality of magnets. But in your testing, how has been the field failure rate? Obviously it's not in the field right now, but in your testing, how do you plan to improve that? And is it equal to or less than the conventional motor that we are using, the conventional belt type or winding, whatever is the conventional motor that is being used currently?
We already have models with BLDC in the market, and there are absolutely no problems with quality. So they are as good as the rest of the product. So there's no issue.
Okay. And on the automotive division side, are there possibilities of getting external sales on BLDC motors, or we are just focusing on the home appliances side?
See, BLDC motor, we are in discussion with various customers. It's too early to discuss on that right now. Why? Because the market has not yet adapted BLDC technology for automotive in a large scale. But within the next couple of years, it will happen for HVAC motor as well as engine cooling motors.
Okay. So right now the focus is to get 90 to 100 crores of external sales on a full year basis from the home appliances side itself.
Right.
Okay. Sure. Thank you so much.
Thank you. The next question is from the line of Ankit Shah, an individual investor. Please go ahead.
Yeah, my question has been answered. Thanks.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants in the conference, if you wish to ask a question, you may please press star and 1. The next question is on the line of Abhinav Jain from SG India. Please go ahead.
Yeah, thank you so much. So, sir, coming back in the question I asked previously, again, there are always variables, but ceteris paribus, if there is no very adverse reaction from competition in terms of aggressive price cuts or unreasonable movement of commodity prices, is it fair to assume that you would aspire for a early single-digit sort of an EBITDA margin with 50 to 55% of gross margin, and maybe some more cost savings thrown in given we are manufacturing APs in-house now?
Yes, that is the intent.
Okay, sure. Thank you.
Thank you. Ladies and gentlemen, that's the last question. I now hand the conference over to the management for the closing comments.
Thank you all for joining the call.
Thank you. Ladies and gentlemen, on behalf of Nirmal Bang Equities, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.